All right, traders, I want to talk about something that's going to blow your mind. I'm talking about something that has helped me keep control of my emotions while trading. Now, consider this statement. Stop trying to win trades. Start training yourself to lose them on purpose. Sounds totally backwards, right? Good. Because traders who actually sleep like babies at night aren't the ones obsessed with hitting every single winner. Nope. They're the ones who bought that contract knowing full well that premium might just evaporate tomorrow. And they simply shrugged. Fine. That's the price of admission. They already said goodbye to that cash. Ready to trade like you've already lost it? Let's flip the script. Look, pretty much every other channel out there is going to preach about bigger wins, laser tight entries, or some fancy new indicator that promises to change your life. And yet, what happens? 80% of traders still tap out within 12 months. That's a brutal statistic. And honestly, the hidden link isn't some secret strategy you're missing. It's the white knuckled fear that shows up the second the underlying stock wiggles even a little bit against you. That gut wrenching feeling, that's what we're tackling today. We're not just flipping the script, we're tearing it up and writing a new one. I'm going to show you how pre accepting a total loss on every trade doesn't just delete panic. It keeps you in your winners longer, transforms your discipline from a chore into your default setting, and ultimately helps you build an equity curve that actually goes somewhere. All right, picture this. You've got $500 you've decided to risk on an options trade. And deep down, you know you really can't afford to lose that 500. Maybe it's earmarked for rent or car repair or just, surviving this month. So you buy the option and sure enough, the underlying stock dips and the contract's value drops a quick $120. What happens? Your heart rate spikes and your palms get sweaty, and you sell the contract all for a partial loss. Then, 5 minutes later, wouldn't you know it, the stock rips right to your target strike price. But you're stuck watching from the sidelines. Does this sound familiar? That emotional hijack happens because your brain tagged that $500 premium as rent money, not tuition money. It's not a learning experience, it's a direct threat to your survival. When your brain perceives a threat, it floods your system with cortisol. This isn't just about feeling stress, it literally shuts down the parts of your brain responsible for rational thought and objective decision making. Suddenly, objectivity vanishes and you're not trading anymore, you're just reacting. This often leads to that dreaded revenge trading spiral where you chase losses, take bad setups, and dig yourself deeper until you consciously decouple those primal survival instincts from your position size. Every single setup, no matter how perfect it looks on paper, is just a potential ambush waiting to happen. You're fighting your own biology. And spoiler alert, biology usually wins. The legendary trading psychologist Mark Douglas hammered one idea home over and over again. If you can't accept losing, you become the loss. What does that even mean? It's simple, but profoundly difficult for most traders to grasp. You must only trade with capital you're genuinely, truly willing to see drop to zero. Not all risk this premium and hope for the best. No, we're talking full, unconditional surrender to the possibility that this specific chunk of cash is gone. And here's the weird, beautiful paradox that surrender grants you superpowers. Seriously, when you've made peace with the loss before it even happens, you suddenly gain incredible freedom. No more micromanaging every tick, no more selling a position for a tiny gain just to protect profits, which often leads to getting outright before the real move. Your fingers don't freeze up when the plan says to enter the trade because you're not gripped by fear. You're free to play offense, to execute your plan with precision and calm, while the vast majority of the crowd is stuck playing frantic defense, reacting to every market flicker. This isn't about being reckless, it's about being strategically detached. It transforms trading from a battle against the market into a disciplined execution of probabilities. So, how do we actually put this embrace the zero philosophy into practice? It starts with some very practical, very actionable rules for allocating your capital. Pick a number that stings a little but won't change tomorrow's grocery list. This is crucial. It needs to be enough to make you pay attention, to respect the market, but not so much that it triggers that primal fear response. For most traders, especially beginners, this often means risking around 1 to 5% of your total trading account per trade. So if you have a $10,000 account, that's $100 to $500 per trade. It's a noticeable amount, but it's not going to ruin your life if it vanishes. It's tuition money, not rent money. Size your position so the total premium paid equals that dollar risk, not a cent more. This is where proper position sizing comes in. Don't just blindly buy 10 contracts because it feels right. Let's say you've decided that your maximum dollar risk is $500. If the option contract you want costs $1, then you can buy exactly 5 contracts. If the contract costs $3, then you can buy only one contract. This ensures that no matter the setup, no matter the volatility, your actual dollar risk remains consistent and within your comfort zone. This isn't just about limiting losses, it's about creating psychological consistency. Now, write that amount on a sticky note, slap it on your screen. This trade owes me nothing. When the position opens, literally imagine shredding that cash. Poof, gone. It's a mental exercise, but it's incredibly powerful. You're psychologically hedging yourself before the market can even try to blackmail you. You've already paid the price of admission. The market can't take what you've already given up. This pre acceptance means you're no longer emotionally invested in that specific trade's outcome, but rather in the consistent execution of your process. This small act of mental detachment is a game changer for emotional control. Hey, if this mindset shift already feels lighter than trying to stack another 10 indicators onto your charts, do me a huge favor and smash that like button. Seriously, it tells YouTube to show this to another trader who's probably stuck in that fear mode we just talked about. More subscribers here means fewer blown accounts out there. And honestly, that feels like pretty good charity work to me. Okay, so proper allocation anchors you. It builds that psychological foundation. But even with that, you still need solid guardrails in place to keep you on the tracks. Think of these as your personal trading commandments. Have an alert at your stop on your broker platform, not in your head. No mental gymnastics. This one is non negotiable. For many options traders, the stop is a premium going to zero. But, and I recommend this, if your plan involves a stop loss on the contract's price, place it in the system. A mental stop is just a wish. When the market moves against you, your brain, flooded with cortisol, will start rationalizing just a little further. It's going to turn around. These are lies your fear tells you. A stop placed directly in your broker's system removes that choice and saves you from yourself. Now let's talk about correlation. 5 calls on different tech stocks still move as one. This is about diversification, but a smarter kind. You might think you're diversified because you bought calls on five different tech companies, but if all five are highly correlated, meaning they tend to move up and down together, you're essentially making one large concentrated bet on the tech sector. A sector wide downturn will hit all of them. Understand what truly diversifies your portfolio and what just looks diversified on the surface. Another good guardrail to have in place, especially for day traders, is to have a daily loss cap. Hit it, walk away. Do Netflix, the gym, grandkids, whatever resets the vagus nerve. This is a critical self preservation rule. Before you even start trading for the day, decide a maximum dollar amount you're willing to lose that day. If you hit it, you're done. No exceptions, no just one more trade. This prevents the revenge trading spiral from ever gaining traction. Go reset. Go do something entirely unrelated to trading. Let your nervous system calm down. Come back fresh tomorrow. This isn't just about managing trades, it's about upgrading your entire identity as a trader. Scared money screams and surrendered money sings. Each trade stops feeling like a personal referendum on your intelligence or worth. Instead, it becomes a simple, objective test of your process. Did you follow your rules? Yes? Great. The outcome is just data. Missed moves no longer feel like personal insults or opportunities you blew. You stop cherry picking charts to post on social media just to prove you were right about something. You just execute. You become a professional. Your friends start to notice you're less reactive, less stressed, less constantly glued to your phone. Your partners might even notice you're actually present mentally and emotionally. And your equity curve, it finally notices you stopped trying to bend it vertical with reckless abandon and started treating it with consistent, respectful care. This shift from an emotional gambler to a disciplined risk manager is profound. It's where true consistency is born. If this conversation has reframed your relationship with risk and you're feeling that mental weight lift, then here's your challenge. Drop a comment below with the exact dollar amount you're comfortable losing on your very next trade. Public accountability is a powerful thing. It wires your brain for follow through. Hit that subscribe button for weekly psychology checks that will keep you sharp. And please share this video with that one friend who keeps buying weekly options hoping for a 10x return. They need this. Ultimately, trading isn't a game of perfect entries or pinpoint accuracy. It's a game of emotional agreements you keep with yourself. It's about self mastery. Decide that the premium is gone before you even enter a trade, and you'll find the market loses its power to spook you, to control you, or make you act irrationally. Trade like you're ready to lose it all, and ironically, you'll finally give your account the chance to truly grow steadily and sustainably. That's the real secret. See you in the next video.